Chris, middle of the year, earnings start next week. We've got a new Fed chair, and what I wanted to start with is the U.S. versus the rest of the world.
Yep.
The rest of the world has been dominating the U.S. over the last 70 weeks.
Yeah, third longest streak since 2000, which is pretty notable. Next chart, Tom McClellan talks about how the dollar looks a whole lot like Trump's first term. I mean, if it gets stronger, certainly you may have some test of that rest of the world thesis, but
Sure.
Definitely bears watching, right? The rest of the world has been on a tear, and it definitely has momentum. Meanwhile, in the U.S., we just had an over 10% quarter for Q2 2026. Ryan Dietrich goes on to point out that anytime that's happened, there's been about an 850 batting average, 85% positive in terms of the next quarter being good, the next 2 quarters being decent. Will that happen here? Who knows? But we'll say this, the advanced decline line clearly is continuing to the upside.
In a positive direction.
Yeah, which is positive. Yep. But what's really interesting is what's winning. If you look year to date, and there are a lot of lines on this chart, but what you'll see is the S&P's up about 9 year to date. Meanwhile, the equal weight is up about 11.5. The green line is the MAG7, and then the orange line at the very top is the rest of the S&P without the MAG7.
Without the MAG7. So those guys have been pulling the weight after the MAG7 did so much of the heavy lifting in the last few years. They have underperformed, and yet on a market cap weighted index like the S&P, it's actually created a little bit of a drag.
So we know that the MAG7 represent what now, like 35-40% of the S&P 500.
Like
I mean, ultimately that means the other companies are doing the heavy lifting. And it's pretty fascinating. I mean, we talked some about financials last week. Certainly energy had a moment earlier in the year. Gas continues to be kind of up, yet oil's been dropping by the barrel. I mean, that could be some margin. It's interesting.
Maybe that, and it's also maybe the amount of money that the hyperscalers, the MAG7 guys, are spending on the CapEx of the AI build-out. I think maybe some opinions have changed in regards to, do we really need to spend all of our free cash flow? And so maybe the markets are punishing them a little bit. Yeah, and going to this last chart, ending on a positive note, Willie Delwich, we've looked at this chart, High Mountain Research, before. Willie makes a point that markets tend to do pretty well when hardly any of the 11 sectors are working, or when many of the 11 sectors are working. Right now, all 11 sectors are positive, and he shows an annualized return. Historically,
that's higher than being in the middle section.
That's pretty good.
And certainly no promise that continues, but it's a good place to be.
Yep.